Welcome. Income from other sources. Income from other source is the last head of income. The other heads of income are income from salary, income from house property, income from capital gains, income from business or profession. If any income does not fall under these heads of income which we have just seen, will be as a last resort be taxable under the head income from other sources. That is why this head of income is called as the residuary head. Section 56 subsection 2 specifies certain incomes which are taxable under this head. They are: first one, dividends. Dividends are either received from an Indian company or they may be received from a foreign company. If dividends are received from an Indian company, they are exempted from tax. The reason being, the company will pay the tax on these dividends under section 115. If the dividends are received from a foreign company, then they will be taxable. The next important income which is taxable here is winnings from lotteries, card games, crossword puzzles, horse races, etc. These categories of incomes are called as casual incomes. The meaning of a casual income is any income which arises due to an element of chance, but it is not because of any efforts put in by the SSC himself. Now, these kinds of incomes are given a separate treatment, therefore, they are taxable under the head income from other sources. Care has to be taken that lottery income or crossword puzzles income or card game incomes are all taxable, and they are taxable on the basis of the gross amount received. Now, what is the meaning of gross amount? Gross amount is that amount which the SSC wins by way of lottery or card games or crossword puzzles. The rate of tax deducted at source on such casual incomes is 30% plus 2% education cess and 1% secondary and higher education cess. Therefore, the total tax deducted at source on such incomes would be 30.9%. That is, under the head income from other sources, the gross income has to be included and TDS which has been done should be added back. This is given a separate treatment further down when we compute total income of the SSC. Now, coming to the rate of TDS for lotteries. For example, if the SSC wins rupees 1 lakh by way of lottery, the SSC will be handed over 69,100, which is the net income. The amount of tax deducted on this would be 30,900, which comes to 30.9% of 1 lakh, the total prize money. So, lotteries always would be deducted at a rate of 30.9% tax at source. Now, whatever TDS has been done should be added back, and the gross income has to be considered under this head. Coming to securities. Securities are bonds which are issued either by the government or by commercial companies. When the government issues bonds, it issues three kinds of bonds. One, exempted from tax securities; second, tax free securities; third, less tax securities. When a commercial company issues securities, it can issue only two kinds of securities, which are tax free securities and less tax securities. Now, what is the meaning of these exempted or tax free or less tax securities? An exempted from tax security is that security where the interest received on these securities is completely exempted from tax. That is, the income by way of interest on these securities is not taxable. Coming to tax free securities. Tax free securities are those securities where the security issuer will pay the tax on behalf of the person purchasing the security. When it comes to the SSC, it becomes tax free, while a less tax security is that security wherein the tax is paid by the security issuing company on behalf of the SSE. Virtually, it is the SSE who pays the tax, but not the security issuing company. Therefore, they are called as less tax securities. Now, there is a separate treatment for each of these categories of securities. When it comes to a security that is exempted from tax, it is not included in the total income. There ends the matter. But when it comes to tax-free security, tax-free securities are issued either by the government or by commercial companies, and the rate of tax on security that is listed in the stock exchange is 10%, and secondary and higher education shares coming to 3% of 10%. So, total is 10.03%. Now, when the security is issued by the company or by the government, the tax is paid by the security issuing agency, and this tax is the tax deducted at source. Whatever security interest amount is received by the SSE, that would be the net interest. The same has to be grossed up, and the procedure for grossing up is net amount into 100 by 100 minus rate. For example, if the rate of interest deducted at source is 10.03%, how do you gross it up? The grossing up would be net amount whatever is received by the SSE into 100 divided by 100 minus 10.3%. Where the security is unlisted, that is not listed in the stock exchange, then the rate of tax deducted on that would be 20% plus secondary and higher education cess coming to 3% of 20%. In order to give a more detailed description of what we have just now seen with regard to securities, we will view this slide. Always grossing up has to be done. And how do you gross up a security that is listed in the stock exchange or unlisted in the stock exchange? For grossing up a security listed in the stock exchange, then net amount into 100 by 100 minus rate, that is whatever is the net amount into 100 by 100 minus rate, the rate being 10.3% for a listed security, and for an unlisted security the rate is 20.6%. The next category of income which is taxable under the head income from other source is rental income received by way of subletting. What is the meaning of subletting? Subletting is where the SSE, being a tenant in a house property, further lets it out to another person. It is a case of subletting. Now, if this letting out was done by the owner himself, it would be taxable under the head income from house property. But here the letting out is done by a person who is not the owner. It is done by the tenant. So, therefore, it is called as subletting. Now, because the tenant is not the owner, it is not taxable under income from house property. It has to be taxable under the head income from other sources. That is, whatever rent you receive by subletting your house would be taxable after giving deduction for rent paid towards the sublet portion. The remaining part would be taxable under the head income from other sources. This is known as subletting. The other income which is taxable under this head is gift. Gift is any kind of benefit received by the SSE. If any sum of money or property is received by the SSE by way of gift, it will be taxable under this head. The total aggregate value of the gift in excess of 50,000 is taxable, but however, there are some exceptions to this. The first exception is If gift is received by a relative, it is exempted. If gift is received on the occasion of marriage or a social ceremony, it is exempted. If the value of the gift is less than rupees 50,000, it is exempted. Family pension received is another item of income which is taxable under this head. What is the meaning of family pension? Family pension is that pension which is received by a person on behalf of a predeceased assessee. That is, any pension received by the surviving members of a predeceased assessee is taxable under the head income from other sources. However, there is a statutory deduction which has to be provided from this income, which is 1/3 of the amount received or rupees 15,000, whichever is less. If you look at the pro forma of the statement of computation of income from other sources, it would look like this. First item would be income from interest on securities less deductions under section 57. This deduction is given for collection charges. What is the meaning of collection charge? Collection charges are those charges which are paid by the assessee to those persons or agencies who collect the interest on behalf of the assessee. For example, the assessee may have different types of securities and the due date of interest on each of these securities would be different. It would be humanly not possible for the assessee to keep a track of all the due dates. Therefore, he gives standing instruction to the bank to collect the interest on his behalf. For this, the bank will charge certain percentage of the amount collected by way of collection charges. These collection charges are given as deduction under section 57 subsection 1. If you look at the pro forma, this second deduction is interest on loan taken to purchase the securities. Interest that is taken or paid by the assessee on any loan which is taken to purchase these securities would be given as deduction under section 57 subsection 2. Now, this note has to be taken here, that is, if the assessee has taken a loan to purchase exempted from tax security, it would not be given as a deduction. Further in the pro forma, the second item given is dividend income. Here, dividend incomes received from a foreign company would be taken into the statement. Then, income from subletting. We take the income from subletting in the inner column and then give deduction for rent paid for the sublet portion, and then any other expenditure like repairs or maintenance, etc., and the net amount is taken into the outer column as shown in the pro forma. Family pension received, take the amount that is received in the inner column, give deduction 1/3 of the amount received or 15,000, whichever is less, from the amount which you have taken in the inner column, put the difference in the outer column, that is the income from family pension. Then coming to winnings from horse races, card games, etc., which is the next item given. Here the total amount which is won by the assessee, that is winnings from horse races, has to be taken into consideration, that is the gross amount has to be included. Then some other categories of incomes which are taxable are winning from lotteries, gifts in excess of 50,000, director remuneration, examination remuneration, any other income not taxable under any other head of income. A total of all this would be income from other sources. The other most important income which is to be included under the head income from other source is composite rent. Now, what is the meaning of composite rent? In certain cases, the assessee will let out his house property along with furniture. that is the rent of the house property towards the property as such and the furniture is not separated, it is inseparable. In case it can be fairly separated, then the rent towards the house property comes under income from house property and the rent towards the furniture would come under income from other sources. But sometimes this may not be the case. It may so happen that the rent of the house and the rent of the furniture may not be separable. In such cases, the entire income which is received by the assessee is termed as composite rent, that is rent of the house property plus rent of the furniture. Because they are inseparable, they are taxable under the head income from other sources. Even if the assessee is in the business of letting out the houses along with furniture, still it will be taxable under the head income from other sources. It does not become income from business. Likewise, any amount received under Keyman insurance scheme also would be taxable under the head income from other sources. Contribution which is to be paid by the assessee towards a welfare fund, also if the assessee gets any refund from such a fund, it will be taxable under the head income from other sources. Likewise, any other head of income which does not fall into the categories of other heads, every head of income will have a watertight compartment like of thing, where the income has to be tested against that condition. If it fulfills that condition, it is taxable therein. If it does not, it cannot be taxable. For example, for any income to be called income from house property, it has to be received by way of letting out the house by the owner, who is the assessee himself. In case the letting out is done by a tenant, it cannot be called as house property, therefore it comes under income from other sources. Likewise, capital gains and any income from business which does not satisfy the test laid down by that particular head of income would be taxable as a last resort under income from other sources. In order to summarize the entire lesson, we can say that income from other source, being the last head of income, is taken into consideration where any income does not fall into any of the other heads of income is taxable under this head. The main items which are to be discussed here are: one is income from interest on securities, the gross interest is included, and the procedure for grossing up is net income into 100 divided by 100 minus rate of interest. The rate of interest for a listed security and a government security is 10.3% and the rate of interest for unlisted commercial or government securities would be 20.6%. Then other important item is winnings from lotteries, crossword puzzles, where the gross amount is taken and gross amount is net amount into 100 by 100 minus rate of tax, and the rate of tax in the case of such casual incomes is 30.9%. Then family pension received minus 1/3 of the amount received of 15,000, whichever is less, the difference is taxable under income from other sources. Gifts received in excess of rupees 50,000 and any other income which does not come under any other head is taxable under the head income from other sources.